Hey folks, Vic here with your weekly trade video for Friday, June the 20th of 2025. You know, candlesticks can offer great clues about what we could expect. Okay, we only use a handful of them, but if you're trying to, read candlesticks like a pro, the inside candle is one of these patterns. It's one pattern that you must understand. But here's the thing: most traders use it the wrong way. And so in this quick clip, which I took from one of Darko's pre-market analysis videos, Darko breaks down exactly what makes an inside candle valid, how to use it in context, and how to boost your odds using the 2 time frame rule. It's all explained in the video. So if you're serious about improving your price action skills, make sure to stick around, and please don't forget to like and subscribe and comment if you wouldn't mind. We'd really appreciate that if this kind of content helps you. Alrighty? Here's Darko.
Let's cover inside bar and do the exact same approach without any deviation. I want to make this, my coaching and trading as objective as humanly possible for me. So the trend, the inside bars, this is one of the candlestick formations, one of the 7, right? Because we had 5 and I introduced 2 more this year, so we have 7 candlestick formations. Okay, so these candlestick formation needs to happen either at the top of the swing or at the bottom of the swing. And if you don't know what top and bottom, like how you can identify those, then you need to go through the content. Okay, so price is dropping and we see this inside bar. It's happening at the end, and yeah, sure, you don't know this is the end because this could be further dropping, but we have a clean swing. Okay, we have a clean swing where we are making lower closes. Okay, whatever you want to try. So we have a swing is moving. So then obviously you don't know if this is continuing down, but you have to, we don't have the benefit of hindsight. So we need to analyze what is in front of us live when the market is moving. Okay, so this is obviously the bottom, even if this is heading down. So now we need to, now we have an inside bar. So this entire month of June, when sorry about that, when you see an inside bar, you draw a fib from the lowest point, obviously this is down, right, to the highest point that makes sense within the 2 time frames rules. That means monthly coincides with daily, weekly coincides with 4 hour, okay, etc, etc. Yearly coincides with weekly, 2 time frames below. Okay, and these 2 time frames below, I've been doing this for 18 years. That's one of the most powerful approach that I happen to realize when backtesting and live trading and everything trading related. Okay, so once we see that inside bar, you draw a fib, and you see, look at your entry time frames level of support. Okay, there might be a level on your higher time frame as well that's stands out. So usually price, and in this specific case we came down to this level of support on a daily chart, reacted, we never breached this high. Okay, made a lower high. This is a complex pullback. We might be heading down into this level. So this inside bar makes it difficult to trade this weekly candle action, and this weekly candle action is more bearish than neutral. I wouldn't say it's 100% bearish because there are 2 wicks, too much wicks for my taste, but it's definitely more bearish than bullish. Also on the 2 time frames below, this weekly candle generated in a very nice swing with a lower close. Okay, so therefore it would have made this into a good trade if it wasn't for this inside bar, because within the inside bar you don't know, price could very well be reacting from this level as well. It's a bit uncertain. That's the problem, because the thing is that the only reason people are never, or I wouldn't say never, but the vast reason why people are not making it in trading is because they don't understand their trading system. They don't have the patience to wait for it. And then when they see a signal, they start second guessing themselves. So there's always confusion within the struggle trader's brain. It's always conflicting signal. So we need to break things down, into a point where everyone understands what I'm saying. So my entire approach and game plan is that when I see an inside bar, one of the the reversal, that means reversal. Reversal means if this is heading down and you see an inside bar, price will be heading up. So if price is heading up based on your analysis, do you want to be shorting this one? No. But if price is coming down, let's just say we are coming down into this neckline or maybe a strong neckline, then we see a bullish weekly candle action. And within that bullish weekly candle action, there is a clean move on the 4-hour time frame. We go for it. Then there is no more excuses, okay, or reasons, okay. Super important. So I will be showing you tons of inside bar where I will be doing the exact same thing over and over again, okay.
So now you know it's not just the pattern, it's the context that counts, because there's inside candles all over the place, but it's the context that really matters. If you apply the inside candle like Darko just showed you, you're really stacking the odds in your favor, right? And that's what we want to do. So I really hope that this was helpful. And if you want to take your price action skills to the next level, check out the links in the description below or in the email that you received for information on getting more in-depth training. Alrighty, thank you so much. Hope you all have a fantastic weekend. See you at the end of next week.